Conversation with the RBI governor. By the way, UltraTech Cement's numbers are flashing on your screen. All of the initial numbers that we have look a little bit better than the poll, which was expected. So the revenues come in at 16,740 crores. That's better. The profit front also we've seen, better than what the street was estimating. Of course, we're waiting for the volume details there. But Nigel is also here to really break down all of the numbers for us. Nigel, looks quite good.
That's what, the numbers actually look quite good. And the problem for UltraTech getting into these numbers was that, in fact, the volume growth wasn't as much. The volume growth was closer to around 5% approximately. The street was a little bit skittish that it could have some kind of an impact in terms of the profitability. But that's clearly not happening. And I want you to pull up the power and fuel cost. On a year-on-year basis, that's down dramatically. It's coming at around 4,177 crores. That compares with around 4,873 crores. So that operating leverage didn't play out as much, but the lower cost has definitely helped them out. And the power and fuel cost is the reason actually that the EBITDA number has got maintained. Even if I look at the freight cost, well, that's a little bit higher on a year-on-year as well as on a quarter-on-quarter basis. But the power and fuel cost is much lower. And other expenditure as well is more or less flattish, though volumes were a little bit higher. So, I think the beat that has come in there, or the reason that the numbers are more or less in line on the profit aspect, on the EBITDA front that's because of the lower power and fuel cost. So clearly, part of that benefit that we have been talking about in terms of lower coal cost as well as lower input cost, well, that's played out. I'm just trying to pull out the debt number. They normally give that number lower down in that release. Just trying to pull that number out. So we have the financials that come up for our viewers on the screen. The capex, they have said, yes, they have acquired the Burnpur Cement. We already know that. The third phase of growth as well has started. So we'll just try to get in further details. But for the time being, Ronald joins us, the Associate Vice President who joins us on the phone line at Sher Khan by BNP Paribas. Hi, Ronald. I just pondered through those numbers. And some part of the street was a little bit nervous with regard to what will UltraTech deliver, because the volume growth isn't as much. And we got used to better than expected volume growth. But it seems for them, what's played in their favor is the lower power and fuel cost. Give us your first take.
Good afternoon. Thank you for having me on the show. So volume numbers were already disclosed by UltraTech before the results itself. So it was expected around 5.5%. So they had already disclosed the volume numbers. And so the numbers, if we see, there is only a 1% beat. So more or less the numbers are exactly in line with the estimates. Like we had estimated around 1,150 rupees EBITDA per ton, and blended EBITDA per ton has come around 1167. So we are seeing a marginal, outperformance both on realization as well as cost front. So marginal bit on both fronts have led to a marginal bit on EBITDA per ton. So but overall, we can say that the numbers were in line with the expectations. As you also mentioned, that power and fuel cost was a little bit lower. So yes, you are right. On a per ton basis, it's a little bit better than our expectation and lower than our expectation on the per ton basis. If we talk about the standalone operations net EBITDA, so it has come around 4427. So which was around 4,900. So there is also marginal dip in net debt also, despite the company's expansion plans going on. So overall, to sum it up, the results are very good. And also the net debt figure coming down sequentially is also a good indication in terms of, ongoing capacity expansions.
Okay.
If we see, now currently we are seeing that during January month, the cement prices have a little bit corrected by rupees 10 per bag. And, that does happen during Q4 where, cement prices come down a bit to push overall volumes for Q4 numbers. But the expectation for the cement sector as a whole, we expect, volume numbers to remain strong in Q4. Although realization may dip sequentially, but operating leverage in terms of, lower power and fuel cost to continue, and which would help in terms of EBITDA per ton improving in Q4 also. If we talk about the value,
go ahead. So
now if we come on to the valuation, now post the run-up in the stock and the cement space as a whole, currently the stock is trading at EV to EBITDA of about 15x. 15 times FY26 earnings, which is in line with its historical average. But whenever the cement industry goes for an improvement in operational profitability and expectation of positive surprise, this EBIT to EBITDA multiple tends to increase. Hence, we might increase our multiple to factor in a good outlook going ahead. Also, currently our price target is 10,500 with a buy rating on the stock. So we'll most probably maintain buy with a upwardly revised prices target.
Got it. Thanks a lot, Ronald, for joining in and giving us all those details. Just want to give our viewers one more detail. The reason that the power and fuel cost has come in lower because they give you the blended fuel consumption on a per ton basis. That's come at around $150 per ton, which is a good decline from around $162. So $150 per ton in the past quarter. In the previous quarter, that means on a sequential basis, it's come down by closer on $12. And on a year-on-year basis, it's come down by $50. So that's the reason why, in fact, these numbers look quite good. To just sum things up, the net debt has gone up a little bit, but that's because of the big capex plan that they have undertaken. So just to give you that number out there, the net debt number, well, it's gone up by a few hundred crores, I think. So just trying to pull that number actually out. I just had a look at that. So that's that number has gone up, but that's par for the course, because they have a big expansion that's currently underway. And that's the reason why, in fact, the net debt has gone up. Yeah, let's get that up. It's 5,541 crores, but that won't really disappoint the street. I think that's more or less par for the course. Some bit of an uptake was expected. And 5,500 means it's gone up by close to 500 crores in the past quarter. So, Pavitra, these numbers that have come in there from UltraTech Cement, there's no shocker that's coming in there. The street was a little bit disappointed on the day the volume number come in because you got used to UltraTech Cement coming in there, giving very, very good numbers, giving industry-leading volume growth. Yeah. And in fact, that didn't happen. But after that 5-6% correction that we saw in the last few days, these numbers are in line. The lower power and fuel cost have played out in their favor, and they have a big expansion plan that's underway. So good numbers, I would say.
Okay, good numbers. The stock is up around 1%. Some of the other stocks also have moved up a little bit, names like Shree Cement, India Cement, even something smaller like a JK Lakshmi Cement. So I guess that playing out on the rest of the pack as well. But Nigel, thanks a lot for joining us and taking us through all of those numbers. With that, we do need to get into a short break now. There's lots more news and updates lined up for you. So stay with us. We'll be back in 2.